welcome back to our coverage here. Joining us now, we have the Canada Sales Congress Industry Panel. I'm Matt Bell. Alongside me is Donna Glasgow, the Editor-in-Chief of the Insurance and Investment Journal, and we will be chairing the discussion today. On our panel today, we have Rob Hollingsworth, Vice President of Insurance Sales for Manulife, Phil Marcelo, Senior Vice President of Individual Distribution for Canada Life, Kim Stanley, Regional Vice President, Sales and Individual Life for Desjardins Insurance, Jim Virtue, President and CEO for PPI Solutions, and lastly, Mark Sylvia, President and CEO of Empire Life.
Hi there. The first question of the day is for Jim Virtue. In your opinion, what is the most important issue currently facing the Canadian insurance industry?
Well, thanks, Donna. I think that there are, a bunch of the standard issues, those relating to low interest rates, the aging advisor force, the new regulations, etc. But I think a different issue that we're seeing today is the issue of the lack of training for advisors relating specifically to life insurance products. What we've seen is a trend in the last 10 or 15 years about people becoming generalists. And by generalists, I mean they're selling both investment products and insurance products. And I think life insurance is a very specific product. It's detailed. They're complicated products. We need to provide better training for advisors to be life insurance salesmen. It's interesting, I sat through the morning at the Canada Sales Congress, and many of the speakers talked about being a specialist. So what we need to do is help those people become specialists in selling life insurance again. And PPI is working to try to do that.
Thank you. How about you, Phil?
Thanks, Donna. I'd agree with what Jim has said. I think those are very important issues that the industry is facing. I'd also add, from a regulatory perspective, when you start looking at the fair treatment of consumers, how that's becoming more and more the language of the regulator, which makes a lot of sense. And I think we're going to see change, but it'll be positive change where everybody in the industry will be working towards making sure the consumer is treated fairly. And I think that's really important as we go forward. Some of the things I touch upon when you're dealing with that is, one of the things we did was our BPR, which means treating customer, making sure the client gets the right product based on the asset that they have with the company versus a high MER. If they qualify for high net worth, well, that's where the money should be. It's what's right for the consumer is the most important thing. You start looking at some of the things around sales conferences and, where they're incentive-based conferences and the change that's going there. And we'll likely talk about that a little later. Those service commissions and how they follow the consumer. If you want to give the right service for the consumer, where should the trailer commission be paid? So those are some of the things that we have to look at. How you target consumers, as we heard this morning in the earlier speakers, where how you target consumers in the world of digitalization and how that's changing and the impact to the industry. So I think those are a lot of different aspects that are impacting the insurance industry.
Thank you. And Mark?
Oh, thank you. Rather than touch on all the issues that were already covered, which are all excellent, I'll just talk about one issue, and the issue that concerns me the most is where our distribution system will be 5 or 10 years from now. One of the things that a lot of the analysts are saying is that roughly 50% of our sales force are around age 59 or older. If 10 years from now we see a situation where they're all either out of the business or inactive, our sales force could be half of what it is right now. I took a look at some statistics, and currently there's 266 agents per 100,000 Canadians. There's 226 doctors per 100,000 Canadians. If our sales force dwindles the way that it's being predicted, we're going to have 132 agents per 100,000 Canadians, and because of the way they're managing the medical profession, there will still be 225 agents or doctors per 100,000 Canadians. That means that a life insurance agent will be far harder to find than a doctor. So I've already sent a letter off to the Wildlife Society to make sure that they put life insurance agents on the endangered species list. So fundamentally, my biggest concern is how are we going to fill that void, and who's going to fill that void?
Thank you.
Thanks, Mark. For me, I'd like to touch on what I think is the potential for very significant disruption to our business. I think we're seeing the rise of the consumer, if you will, And I think there's a significant disconnect between the value proposition of our industry, or at least of manufacturers, and consumer expectations. And as a result, when we see such a disconnect, that creates a great opportunity for a disruptor to come in, be it a fintech type disruptor or us maybe disrupting ourselves. But I think what's happened is the life insurance acquisition experience is no longer defined by the life insurance business. You know, people expect the same digital, anywhere, quick, simple, easy experience that they have with any other industry, yet we're not really providing that at this point in time. So how do we align distribution with where the real market opportunities exist and lie going forward? And to me, that's a significant risk for us as an organization.
Thank you.
Thank you. Hi. Well, my colleagues, I think, have hit a lot of the major points, but from our perspective, one of the other issues that we touch on, elaborating on succession and the future of the industry, is the lack of engagement of an entire generation, and that would be the millennials. Under 35, the engagement of that group of people, both as a career choice and as a client base, is a real challenge for this industry. The way that they communicate and the way that we have to reach out to them through technology, through the various social media platforms, is a challenge for traditional insurance carriers, and it makes it a challenge for us to get out, reach our message, because we're flying in the face of the traditional role of the insurance advisor, and that would be one of the issues that we would suggest is facing the industry right now.
Okay, thank you very much.
I guess our second question today is, 5 years from now, how do you think Canadians will be buying insurance? What will be different from now?
I can touch on that. My view is that the need for advice is definitely here to stay, and as long as there's a need for advice, there'll be a need for advisors. But I do think they're going to have to evolve their practices to meet the changing needs of consumers. What we know is today's consumer and tomorrow's consumer are telling us that they want a different experience, and they want to own more of the experience. And so what does that look like? Is it a traditionally advisor-led experience? Is it a hybrid model that doesn't exist today? I can see advisors of the future perhaps maybe needing to have 24/7 live chat capabilities, if you will. Something that's not in existence today. I do think, though, that we can't forget that we're in a very unique business in that I think in every other sales category in the marketplace, it's really about facilitating the sale. And life insurance doesn't operate that way. It's not a matter of people making the purchase decision and going to execute. So the need for education, the need for good advisors is there. Most Canadians are underinsured, so there's tremendous opportunity for advisors. But I do think they'll need to evolve, how they think and how their practices operate.
Yep, Jim?
I think that I agree with a lot of the things that Rob just said. However, in the business marketplace and in the very high net worth marketplace, I don't really think we're going to see a transition to more online. This is a very consultative approach. It's something that will continue to be done the way that it's being done now, with one-on-one, sitting with advisors, talking through the issues, etc. We're going to see the industry really change and have almost two different approaches. This more technological millennial approach that Rob talked about, but in the business marketplace and in the high-end market, I think it's still going to be an ongoing consultation.
Yeah, and I agree with both those comments. And I think the thing I would add is when you start looking at how consumers will buy 5 years from now, we know they're not all going to be buying the same way as they do today. And they'll leverage off the experiences they have in other products that they're buying. Now, the insurance world is a little bit different, but at the same time, I think we got to be aware that we don't know what we don't know yet. And what the future will look like, whoever enters into our marketplace, if Google Finance decides to come into our marketplace, what's that going to look like? When you start thinking of, Uber, 5 years ago, none of us would have been able to spell Uber, and never mind know what it is. They own no taxis. They don't own anything. And yet they're a very large transportation company. So what's going to happen in our industry? I don't know. I will add, though, as Jim has said, I think the advice channel will remain. It's got its place today. It will have its place tomorrow. Absolutely no doubt. How they work with the digital age will be interesting. And as carriers, I think we have a big play here is how do we bring the two together so that the advisors can leverage off the technology. Because there is a market where we're going to have to simplify our product so consumers might want to buy it direct as well. So we don't know what we don't know yet, so it's wide open.
I'd just like to add to that. If we take a look at the way products are purchased now compared to 10 years ago, for millennials and I believe even a lot of baby boomers, their first point of entryway to think about something they want to buy is to go on the internet and do a bit of research. I think that is going to be a significant part of where things are 5 years from now. The question is what happens after that? As more and more advisors and companies develop a digital draw or digital footprint, consumers are going to get a chance to go from doing research to execution, and I think that's an entry point for advice. I think, as Jim said earlier, in the more commercial markets, high net worth, the entryway will probably be through the business relationship more than it will be through the internet. The key issue here is where are the consumers going to gather in terms of their purchasing activity? Advocates did a study a couple of years ago in which they categorized customers as being possibly self-serve, assisted, or their third category was dependent. In the high net worth market, it's an often a dependent relationship. The advisor is really looking after a wide range of issues for the customer. The question is, on the entryway into the internet, how many of the millennials and others are going to go the self-service route? How many are going to go the assisted route? Another advocate study showed that 93% of consumers, when polled recently, felt that advice was either essential or very beneficial. The question is, how do we make sure we give the entryway for that new buyer to acquire advice?
Is there anything else you'd like to say, Kim?
I think that the next 5 years for the industry are very exciting. We have an opportunity to be so innovative and so creative and look at different ways to reach out to our clients and to new clients. And when we look around the world, there has been some really great innovative ideas that are signals maybe of things that are to come. Allstate in the States has an app you can put on your smartphone that will remind the person, the time on your meter is running out and you parked in whatever section of a parking lot. There's a company in Japan that has great things on their mobile apps. You can have insurance for a day if you're borrowing someone's car. So there's all kinds of great ideas. I think moving forward, though, to everyone's point, is the industry has great opportunity, but it's engaging people ahead of time. It's engaging them with brand awareness. It's making them comfortable with the brand, making them comfortable with who we are and what we do. And it's not just a company brand, but it's an advisor brand. It's an advisor who has the ability to reach out and individualize themselves in the marketplace and the value add that they're going to bring to a potential client.
The next question is, what do you think the greatest challenges facing financial advisors this year and over the next few years? What would be these challenges?
Well, I'll start it off. I mentioned it earlier. I believe that the biggest challenge is to understand how to use the internet as a prospecting tool. If you take a look at the way advisors acquire clients, there's referrals or warm leads, and there's cold call prospecting. Back in the old days when we had the career system, agents would get on the phone and we do something called dialing for dollars. They make 10 calls, get 3 appointments and 1 sale. We're not allowed to do that anymore, and the internet is probably now the harvesting method for those cold call prospects. So I believe that advisors need to develop a digital draw or a digital footprint so they can use that methodology to acquire new customers, and it's going to be an important part of developing and growing their business so they're not relying solely on referrals.
If I can add, and Mark's hit it on got the right comments there. I would also say that the world is going to become more transparent. So as an advisor, you're going to have to learn to deal with the consumer because you got to be transparencies all over, right? And the consumer is probably more informed today than they ever were, which is not a bad thing. It's going to force advisors to be even more knowledgeable about their business and their products. And as Jim also touched upon earlier about they're going to be specialists. So how do you train these? How do they become, top-notch advisors? So that's one. I think the other one is going to be documentation. And I know we keep talking about compliance, but I think that's a really big one. And if you're doing the right thing for the consumer, and most advisors are, quite honestly, it's documenting your files. It's not just being able to say, here's what I did with my client, here's how I arrived at the need and the solution, but documenting so that if anybody ever comes in and says, hey Phil, how did you come up with that product and that amount, I can take out a file and say, here's how I arrived at that. So I think that's where it's going to be really important. But other than that, I think it's quite a great career ahead of all for advisors. So it's a good.
Thank you very much.
I think another point is we're talking about how the consumers have changed. Well, the consumers' lifestyles have changed too. People used to live this very linear life, right? We went to university, we got a job, we retired at 65, we got the gold watch. People don't live that way anymore, and what we as an industry have to do is help develop products that are much more flexible, that allow people to have the opportunity to take a holiday and not pay their premiums without losing their coverage. We need to change the products that we're selling from sort of more inflexible old style products to adjust to consumers' new lifestyles, because consumers aren't living the same way. It's common now for people to take 2 years off in the middle of their career. So we need to really see a change of products, and I think advisors can play a big role in helping the insurance companies make those changes.
Thank you.
Yeah, I would agree with Jim. I think simplicity will play a very key role in that. But just to be additive, I agree with my panelists, but I also worry a little bit about all the noise that is in the marketplace today in our business and outside our business about our business, and that's going to get turned up, not down, over the next few years. And I worry about the distraction that's causing our business. And so I think the ability to understand what noise you need to pay attention to and what's important, and what you don't need to pay attention to and let go, and that's going to be a challenge for, I think, all of us going forward.
Okay. Thank you very much.
Just to build on the noise, just the one other point, I think certainly all of the key points have been raised, but the noise is coming from not just within the industry, it's outside the industry. It's the noise from the regulators, it's the noise from the legislators, it's the noise from our companion industries, if I can use that term for other parts of the financial services industry. And advisors need to be cognizant of what is coming down the pipe, because it has a lot of the legislation that's coming into play that was from this year and next year will dramatically impact a lot of things that they do in their normal everyday practice. And it's really important, and it's an advisor needs to pay attention. They need to keep up on everything. We've learned in the sessions today, yes, back to basics is really important, but invest in yourself. And I think that that'll be a very important aspect for advisors moving forward, probably more than ever now, is to take the time to learn and educate so that you can best serve your clients.
Thank you.
And we're nearly out of time, so we got time for one more question. So I guess, lastly, what is your opinion on sales volume-based travel incentives for advisors offered by insurers or MGAs? What is your opinion?
I've got the mic, so I guess I'll start. But we, like the industry, have not seen any real potential or conflicts of interest around this, but I do understand the potential for that to exist, the perception to exist. And so we want to protect the image of the industry, and hence, we understand the recommendations and support the recommendations. That being said, selling life insurance and selling a lot of life insurance is very difficult, and it does need to be recognized and deserves to be rewarded. And I'm glad that distributors have been and will likely continue to do some of that recognition. But we as manufacturers need to revisit and take a look at what does our reward and recognition system look like, so that we can continue to try to bring value and reward advisors for their business and their loyalty. So
I'll just echo those comments. This is a consumer issue, and it's a consumer perception issue. The good news is that depending on what the sales channel is, travel-based incentives are still going to be available through MGAs, where they're offering an array of products, and the consumer's interest can be looked after by the advisor, and that perception can be upheld. So the other area where it'll be able to continue will be for single company representation or career systems, where really the choice of products being offered by the advisor is from a single source. So the only area where we're seeing a change will be the manufacturers of products being able to offer direct to the advisor an opportunity to be involved in a travel incentive where there's a perceived conflict of interest. So these changes, I think, are appropriate, and it doesn't mean an end to it. It just means it's going to be changed a bit.
And if I add we totally agree with the comments. I think the sales-based conferences, like we've been privileged to be able to host our advisors and MGAs at these events, and it really has been a fabulous run here. But the time has come. There is a perception out there that advisors might be selling the wrong thing. We haven't noticed it, but it's a perception. So why put our partners, why put our advisors in a position of perceived conflict of interest? So we made the announcement early this year in February to put an end to these incentive-based conference, and actually last week was our last one in London, England. And but we are not putting an end to meetings and educational. It's going to take a new format. It will take the rest of this year to be able to announce something where we are going to be able to still hold meetings for advisors. It'll be more educational, and they'll have to pay their own way to get there. But I think it's a good message. The industry is taking the right steps, and I encourage all of the players, if they haven't already done so, to follow our footsteps.
PPI, we strongly support gathering advisors together for in-depth education, skills development, networking, working on our businesses together, and we will continue to do that too. We see that we have a very important role to play in this new future.
I concur. We are very similar. We're undertaking a full review, the same as all of our colleagues, and completely understand the perception in the industry. And we'll have our announcements coming later on, as well as what the new format, so we can recognize those advisors that are very successful.
I guess we have time for just a quick little question, and I guess it's in a sentence, what is your advice for young advisors out there entering the field? What would it be?
Do you mind if I go first, gentlemen? I don't think it's changed. See, I've been in this industry a long time. I come from a long line of people from the industry. I don't think it's changed. You have to be passionate. You need to be passionate about the people, passionate about helping people, really, really take an interest in what you're doing. I think that's important. And have really good listening skills. I think that's another key component. I don't think those characteristics for any new advisor would change from what we've been experiencing for the last several decades.
I would agree with Kim. I would also say that don't be embarrassed to say you sell life insurance for a living. I mean, it's a noble career. Does a tremendous amount of good, and I think we have a tendency to hide behind fancy titles sometimes, when really what we do is we sell life insurance and we change lives. So I think that'll be important, and also the business is very difficult, and I think establishing good mentors early in your career and diversified mentors is very, very important. Also, perhaps building out your brand through a network. It's a lonely business, so how can you create partnerships as part of a team environment going forward? And I think there's tremendous opportunity. The investment space is crowded. The insurance space is wide open, and it's a tremendous opportunity and tremendous career. So.
I would just add to, my advice would be to develop your technical skills. The quality of your advice is going to be dependent on your ability to understand the products and services and provide financial planning advice to your customers. So develop your technical skills. That will see you through a lot of situations where clients really need help, and you're able to provide it.
All extremely valid points. I just add, just because I'm going to say something here. Be honest, take care of your clients, put your clients' interests first, and be patient, and you'll be fine in this business.
Yeah. And I would just add to specialize. There's nothing wrong, as Rob said, with being an insurance advisor, right? So specialize, learn your craft, provide good advice, and it's a great career for young people.
And that's where we're going to end the panel today. So thank you to Rob, Kim, Phil, Jim, and Mark. Thank you for coming in today to participating in our first industry panel at the Canada Sales Congress. If you want to watch this panel again, it will be available on our website in the coming days and weeks. And of course, in our souvenir handbook, which will be sent to you in the coming weeks. Now, it is now lunchtime here, so we're going to take a break for about an hour or so. And we're going to be back here at 1:10 p.m. Toronto time to begin the afternoon session. We have a few guests before we go back to the proceedings at 1:30 in the afternoon. I'm Matt Bell. Thank you for joining us this morning, and have a good lunchtime.